Neil, you've been in the acquisition business in the mutual fund space for a number of years. What's your perspective on the market today?
Well, I think it hasn't really changed from the standpoint that once you get into this business, you're either going to be a buyer, or you're going to be a seller in this time frame. Before it was you were able to grow organically. You could do well. You could do well on your returns. If your returns were superior, you might hit the Schwab Select List. You hit the Schwab Select List, even going back into 2018, you'd see a $500 to $1 billion coming in a heartbeat because you were on the Select List. That game's over. It's not there anymore. Organic growth is tough from the standpoint that there was a race to zero on fees. And if you look at the headlines or you look at the regulatory authorities, they all think that zero fees are the best. They forgot about the end user. What is the end user getting at the end of the day? Are they getting a return on their money? And so the sales pitch has all been about fees, when it should be about returns. If you'd give them the returns as a shareholder, fees would take care of themselves. Now, we're in our 12th acquisition in the mutual fund arena. We don't have separately managed accounts. We don't have institutional accounts. But the one thing I learned in 1996 when I started my first mutual fund was it's easy to manage the money. It's very difficult to manage the mutual fund company for the benefit of the shareholder, and becoming increasingly difficult in this regulatory climate. And then the climate, like I say, with active versus passive or low fees, or the best thing to do is do an ETF or whatever. The bottom line is, in today's market, you're either a buyer or you're a seller. It's going to be very tough to grow organically with those headwinds.